The last several years in the cryptocurrency industry have certainly seen a lot of ups and downs. The massive swell at the end of 2017, the doldrums of 2018, and the recovery of 2019. However, despite the volatility in most of the cryptocurrency industry, a few corners of the industry have managed to continuously grow. One of these is the crypto lending sector. In early 2019, after one of the crypto market's lowest points in months, New York-based crypto lending company BlockFi reported that both its revenues and customer base had increased to the tune of over 100% since June of 2018, when Galaxy Digital founder Mike Novogratz invested $52.5 million in the company. At the time, almost exactly 1 year ago, Zac Prince, the company's chief executive officer, said that the practice of crypto lending is a, quote, low-risk type of lending, and claimed that BlockFi had never suffered any principal losses. Recently, finance magnates sat down with Zac Prince to speak about what's happened in BlockFi's journey throughout 2019, as well as the evolution of crypto lending, his own company, and the influence of DeFi lending platforms on the crypto lending space. So, Zac, can you start by telling our listeners a little bit about yourself and the work that you do? How did you get involved in this world of cryptocurrency in the first place?
Yeah, sure. So I grew up in Texas as a competitive tennis player throughout my youth, and then
really,
I was nationally ranked, traveling all over the country every other weekend to compete in tournaments and stuff. And I still play tennis a fair amount, but I live in New York now, and it's pretty challenging to play tennis in Manhattan and the surrounding areas. So I've switched over to squash a little bit, but huge tennis fan and racket sports in general. I put myself through school as a semi-professional online poker player. So I've always been, attracted to finance, risk management, statistics, that type of stuff. And I always anticipated that I would work in the financial services industry in some capacity. But I graduated from college in May of 2009, smack dab in the middle of the, financial crisis. And I ended up getting a job in New York, but at an advertising technology startup. So throughout my professional career, I've always worked at high growth, venture-backed companies, originally in the ad tech sector at two different companies, one that was acquired by Google. So I spent a bit of time at Google, and then more recently and more relevantly for BlockFi, after my stint in ad tech, I moved into the online lending sector at two different companies. So peer-to-peer lending, online lending. There was a lot of activity and a big boom there going back 6 or 7 years now. And that sector is actually a core part of the lending environment in the U.S. market, and it's responsible for around 30% of the consumer loans that are made every year now in the U.S. at least. And so I was working in that market, and I was getting exposure to all these really interesting lending platforms and fintech companies, and I kind of became the fintech guy amongst my friend group, and people were always asking me, should I use this robo-advisor? Should I invest in commercial real estate on this platform? And I decided to start writing a blog. This is back in 2014. I decided to start writing a blog about just the different things I was seeing and what I was doing, and lots of various cool things that were happening in the fintech world in terms of products being created for consumers that didn't exist before, or that were better than what existed before. And that's what led me to Bitcoin. So I was recommending on this, small blog that I had that people create a Coinbase account and buy Bitcoin back in 2014. And then in 2016, I learned about Ethereum. And the original analogy I made in my head was that Ethereum was going to be like an iPhone, and Bitcoin was kind of like a BlackBerry. And so,
I like that.
And the iPhone's going to win. So, I invested a fair amount in Ether pretty early. And then in the back half of 2016, I just started getting, increasingly interested in what was happening in the sector. And at a certain point, my wife made me start going to cryptocurrency meetups because she was tired of hearing me talk about this stuff so much. She was like,
you talk about it, but not here.
Yeah, go find some other people to nerd out on cryptocurrency with. And so I started going to meetups in New York City in back half of 2016, early 2017. The folks that were attending those meetups really started to shift. And when I first started going to them, it was some of the earliest adopters, computer scientists, libertarians, hardcore Bitcoin folks. And then early 2017, you started to see more venture capitalists, entrepreneurs, folks leaving their job on Wall Street and coming to these meetups in a suit and tie, and everybody was just getting really excited, and it seemed like mainstream adoption was starting to happen, or in the early stages of happening. And I decided I just had to get involved in the space full time. And given that I had been working in online lending and alternative credit, that was kind of the first place that my mind went. And so that's what led me to the original idea for BlockFi, which was to build debt and credit markets for the cryptocurrency ecosystem. And our kind of vision and platform has expanded quite a bit since then. But I left my other job and started BlockFi full time in the summer of 2017.
Okay, gotcha. So you've really kind of been through it then over the last couple of years with during your time at BlockFi, seeing a lot of changes in the cryptocurrency industry.
Yeah, absolutely. I mean, the market has improved in a lot of ways in terms of the financial services infrastructure, in terms of regulation, in terms of market participants. But it's also kind of, at least since early 2018, been in a bit of a downtrend, at least relative to the all-time highs that were hit in the back half of 2017, when we really had that kind of bubble type level of excitement. But at BlockFi, we've been fortunate to have grown throughout that entire period and grown pretty rapidly throughout that entire period. And the reason that we've been able to do that is because we're bringing things into this market that didn't exist before. So the first two products that we launched, one being the ability to borrow money secured by your cryptocurrency as collateral, and the other being the ability to earn interest on your cryptocurrency holdings, were things that didn't really exist until we brought them to the market at BlockFi, at least not at the level of scale that we're doing it, and not available to retail investors. So we've grown very quickly over the last couple of years and change, and we have some really exciting things in the pipeline for this year, which I think will be part of a bigger trend that we're going to see in the cryptocurrency space, of just increasing adoption on both the institutional and retail level, increasing integration of the cryptocurrency ecosystem with traditional financial services, and making the value proposition and the way that you access cryptocurrency look and feel very similar to what exists in the traditional financial world. And all of those things, in my view, are going to be very positive for the sector overall. So we're cryptocurrency bulls over here, and we think that 2020 is going to be another breakout year for the sector.
Right. So can you get a little bit more into the specifics of, you mentioned that that BlockFi has some things coming out in the pipeline this year in terms of creating products that are going to foster growth for the ecosystem as a whole. What are those products specifically? Are you at liberty to say at this point?
Yeah, absolutely. We've actually been pretty transparent about our plans, and we've recently put out a letter from the founders. It's available on our blog, where we talk about everything we've done to date and what we're building this year. Fundamentally, we see the company going now from our phase 1 into our phase 2, with the big difference between those two phases being that in phase 1, we only had products for folks that already own cryptocurrency. So you're not going to get a loan secured by your cryptocurrency or earn interest on your cryptocurrency if you don't have any cryptocurrency. And in phase 2, we're going to have products that make it possible for someone to own cryptocurrency for the first time using BlockFi's platform. And so the two big things that we're doing around that this year are we're launching a trading functionality on our platform that looks and feels a bit more like a robo-advisor versus traditional crypto exchange, but giving someone the ability to connect their bank account, buy their first $100 or $1,000 or $10,000 worth of cryptocurrency using our mobile app in a really seamless fashion. And the second thing that we're doing in the back half of the year is launching a Bitcoin rewards credit card. So a normal credit card, just like your Chase Sapphire Reserve or your airline or hotel credit card that gets you points, except instead of earning normal cash back or airline miles based on how much you spend on the card, you'll be earning Bitcoin. And we think that that product will be very relevant and exciting for everyone who is already interested in cryptocurrency, but also a very easy way for folks who don't own cryptocurrency yet and haven't been able to cross the chasm of taking their own money to buy some Bitcoin. We think it'll be a really easy way for them to start to get exposure to the asset class.
So is there any particular demographic of people that BlockFi is aiming to be a service for? Are you mostly after institutional investors at this point, retail traders, or just everybody?
That's a great question. We have products for both. So, and it's kind of critical to the delivery of our products to retail that we have institutional connectivity to facilitate that. So, for example, when we're paying folks 6% interest on their Bitcoin that they hold with BlockFi, the reason that we're able to do that is because we lend Bitcoin to institutional borrowers of cryptocurrency, and we think of both of those participants as clients. We think of the retail individual who's holding Bitcoin with us as a client, and also the institutional market participant as a client as well. And in terms of our targeting, we are, there are some things that are kind of filters for us right now. So we're today primarily focused on the US market on both sides of the platform. On the retail side, our client profile skews younger, it skews male, it's concentrated around the coasts. So, California, New York, East Coast, West Coast, Texas. And on the institutional side, we've had a focus on working with traditional financial institutions who have started becoming active in the cryptocurrency market. So firms like Susquehanna, for example, who's also an equity investor, very large business, has been operating in all different types of traditional financial markets for a long time, and is now starting to become increasingly active in the cryptocurrency market as well. That's been kind of the target profile that we've had on the institutional side.
Gotcha. So in terms of retail investors, then, is BlockFi working to try and reach new demographics of people? I know that you mentioned, part of this year's plan is to start offering crypto lending services to people who don't own cryptocurrency. Presumably that means that at least some of those new users, new customers will come out of, maybe people who aren't younger and male and located on the coasts. So I'm curious if there's been conscious efforts at this point to try and reach maybe older people, older women who live in the Midwest, or somebody who's not typical cryptocurrency user, let's say.
Yeah, we're just getting started. I mean, the short answer is yes, but we're in the early stages of expanding the targeting that we're doing in terms of our marketing efforts. We're going to do things that are kind of super broad and not hyper targeted, but will hopefully be attractive to a wide range of audiences. So For example, later this year, we're planning on coming out with some, really fun and interesting video type commercials that we'll be distributing through different channels. I don't know if you saw the Dollar Shave Club commercial back in the day that was a big kind of viral sensation. We're going to take a few shots at creating that level of excitement around some of the marketing things that we do, and having it be very broad. And then we're also going to continue expanding our work on the hyper targeted side, with all of our different digital and performance marketing efforts, and bringing those to places and targeting segments that aren't our typical profile of client that we have today.
Okay, that's exciting. I'm excited to see these commercials that come out. I wish you all the best of luck with that.
Yeah, thanks. It's going to be fun.
Yeah. So I want to talk a little bit more broadly about DeFi. We've talked lightly about a few trends here, but first of all, can you give us your definition of DeFi? It's it's a term that it isn't quite as, let's say, buzzwordy as blockchain and Bitcoin were back in 2017, but it is a term that is sort of tossed around at times without taking a big without deeper meaning, perhaps. And as such, it has sort of different meanings to different people. But for our listeners, people who may not have a great idea of what DeFi means and what DeFi is, can you tell us from your perspective, what does that mean?
Sure. So I think conceptually, I think it's a fantastic marketing term. I agree that there might be some confusion around what is DeFi and what isn't. The way I think about it is that conceptually, what DeFi is going after is this idea that finance should be as open as the internet, and it doesn't matter where you're from or how much money you have. You should be able to access the same product that someone who's in a different place with a lot more money is also accessing, and it should be completely open. So conceptually, that's how I think about DeFi. Functionally, the companies or projects that have associated themselves most closely with the term DeFi to date, you could categorize by two things. Number one, they've built the core part of their technology platform using a blockchain-based infrastructure, primarily Ethereum. So when you're interacting with these platforms, what you're interacting with is smart contracts built in native, blockchain-based coding languages that are open source and publicly available. So you can interact with one of these projects and then go and audit the code if you want to, because it's all on a blockchain. That's number one. They're built on blockchain technology natively. Number two is that they don't do KYC. KYC is know your customer. That's the thing that happens when you're signing up for a financial service or another service, and they ask you to give them your social security number or your ID or your phone number to make sure you're not an outlaw or a money launderer or terrorist. And none of that happens in DeFi. There is no KYC in DeFi. So the world of DeFi has been growing quickly. There's some really cool things happening in DeFi. But today it's ultimately, a fraction of the size of businesses like BlockFi and traditional regulated exchanges in the crypto world. And there are differences in terms of how BlockFi operates versus DeFi in that we are regulated, so we do KYC, which on the one hand is annoying because for someone to use our products, they have to give us their information. We have to make sure we know who they are, versus DeFi where you can just go and use it. But on the other hand, it's been very helpful to us in that we've been able to raise large amounts and different types of institutional capital that we simply wouldn't have access to if we weren't taking the regulatory and compliance steps that we've taken. And two, it's enabled us to bring products to market that we wouldn't be able to bring to market if we weren't similarly regulated. For example, the credit cards, the loan product, and having bank account connectivity with all of those. So being able to receive money from someone's bank account or send money to someone's bank account. None of those things happen with DeFi currently. And then lastly, one other difference I'll call out is just the speed of development. So, we started last year at BlockFi with one product. We ended the year with 3. We're starting this year with 3. We'll end the year with 5. Because we're using kind of tried and true, more developed technical infrastructure components when we're building our products, we're able to, at least today, iterate and develop new things much faster than the speed of development that you see in the DeFi world. But in general, I think right now in the crypto ecosystem, we're still very much in the early stages, and it's a kind of one team, one dream mindset, and everything that's happening, assuming it's not fraud, is really a net positive for the space.
Right. So over the course of the next year, as your company is projected to grow, but also these DeFi platforms are also projected to continue growing throughout the next year and also beyond. So how do you think that the relationship between companies like BlockFi and decentralized finance companies will continue to change and develop? Do you think that the no KYC model that DeFi platforms employ is sustainable over time? Will one of these things overtake the other, or will they continue to coexist?
I think DeFi primarily exists in the lending world, which is the primary world that BlockFi has operated in so far. And I think what we'll see in the lending world is similar to what we've seen in the exchange world, where centralized exchanges and decentralized exchanges, or DeFi, coexist. And the centralized exchanges are ultimately orders of magnitude bigger than the decentralized exchanges, but they both serve a very valuable purpose.
Okay. So I want to ask you also about this money transmitter license. Speaking of being a regulated company, that you guys received in Washington State, and I believe it was in December. Is that correct?
Yeah, that's correct.
Yeah, and that gave you the right to offer interest-bearing crypto accounts in Washington. Do you offer interest-bearing crypto accounts in other states and other locations, or is this unique to Washington State?
We do offer that functionality in other states. We have a variety of licenses, and we have a variety of licenses that we already have, and additional licenses that we're working on receiving at the federal and state level. So at the federal level, we're an MSB, which is a money services business in the U.S. At the state level, starting in 2017, we applied for and received the lending licenses in quite a few states. And now we're in the process of receiving money transmission licenses in quite a few states. And Washington was one of the first ones to approve that license. Since then, we've also been approved in Oregon and Kansas. And the way these licenses work at the state level, depending on the state's regulation, you may need a license in the state, you may not. So generally for the lending licenses and the money transmission licenses, there's 25 states where we don't need a license, 25 states where we do need a license. And if you're a individual coming from one of those states, you might be able to access 2 out of 3 products on BlockFi's platform until we have a certain license. And so that's some high level background on how it works and what licenses we have.
Yeah, that's fantastic. So throughout the process of applying for these license and staying as compliant as possible with regulations in the United States. Have you encountered very much pushback as a cryptocurrency company, or has that been more or less of an issue than you've anticipated?
I would say that, in 2017, when we were getting our first lending licenses, it was very challenging at times.
Okay.
Regulators weren't really aware of cryptocurrency at all. We had to do a lot of education. We received some, reactions to our license application that were just wrong, because regulators would be like, they would see the word Bitcoin and they would say, that sounds illegal,
Oh,
but that's, that's changed a lot. There's, quite a few companies who have gone down this path now for various licenses. And so the level of familiarity from regulators with cryptocurrency and understanding that, for the most part, it's not that different than other types of financial services from a regulatory point of view, has gotten a lot better over the last 2 years. But it's definitely something that requires a lot of time and investment to do. But we're going to continue to stay focused on it. We think it's really important for our business long term to have a top-notch compliance infrastructure like we have.
Absolutely. Are there any, given the pieces of cryptocurrency related regulation that are currently making their way through Congress, most of them are sort of reactionary things created as a result of Libra. But are you anticipating, that 2019 could finally be the year that the crypto industry sees some regulations that are clarifying and helpful and so perhaps not supportive, but at least let's say making operating within the legal space a little bit more, a little bit less murky?
I would not say that I'm bullish on that.
Okay.
In general, I'm rarely bullish on. Regulatory groups that cut across a bunch of different spheres getting together and doing something great together, and that view is informed partially by, like for BlockFi, a lot of the extra effort that we have to put into our licensing, having some federal licenses, some state licenses, is a problem or a challenge that's existed in fintech for a long time, and crypto's just kind of caught up in that bigger context. One of the things that was getting a lot of attention a few years back was a license that the OCC wanted to put out. The OCC is a federal regulator, and it was going to be a fintech charter that enabled fintech companies in the U.S. to not be a full bank, but create certain types of financial services and products, and do that using just one license at the federal level instead of having to go to each state and get licenses at the state level. And everybody in fintech was really excited about it. This is going to be a great thing. It's going to streamline operations, be a positive piece of regulation, et cetera. And then New York sued the OCC and basically blocked the whole thing. And so it's it's really challenging. So in some ways, crypto's just caught up in that, right? And another thing that crypto's caught up in is a long-standing battle for jurisdiction between the CFTC and the SEC. So some cryptocurrencies like Bitcoin are kind of very clearly deemed commodities by regulators, which means that they're under the primary jurisdiction of the CFTC. Other cryptocurrencies may or may not be securities. And so you've got, and like that, crypto isn't going to solve that jurisdictional battle between the SEC and the CFTC, or I wouldn't bet on that, at least. I think we'll be in a similar place at the end of this year that we're at now at the beginning of the year in terms of regulation.
Right. So, as an American company, is that something that you see as perhaps, for BlockFi, it sounds like you've done a good job of navigating the space and sort of working with what you have in terms of, regulations. But, do you think that other areas of the world are going to continue to charge ahead in terms of innovation and, the kinds of companies and products that they're able to support and offer? Is the United States going to be sort of stuck in this place like for the foreseeable future?
Yeah, but I mean, I wouldn't necessarily call it stuck. I mean, there's what the United States has at the end of the day is the largest market in the world and the reserve currency of the world. And, say whatever you want about the future and how China is going to take over or the dollar's reserve currency status is going to get stripped away. Like, in my view, those things actually aren't close to happening at all. And if you compare America's challenges to other countries' challenges, specifically China, just because I already mentioned them, like I don't know that the majority of people around the globe would want to switch to a world where China is the primary power versus the U.S. Right. So there's this like market sizing and lack of better options that, in my view, keeps America in kind of a leadership position. Despite some of the challenges that we have. It's just the cost of doing business, right? Like, we've got some funky things in America. Taxes are another one. Like, we're one of the only countries where it's on the citizen to figure out what their tax liability is.
Right.
You have to hire accountants and send the government your taxes and cross your fingers that you did it right. Most other countries don't operate that way. They operate taxes like a credit card bill where, you as the citizen just get your tax bill. And if you don't think it's right, then you can contest it. So there's some funky things here. I don't think they're going to change. I think at the end of the day, it's still the best and biggest system that exists. And, it's just the cost of doing business.
Okay. So Zac, before we wrap up, do you have any announcements for BlockFi or for yourself? And can you also tell our listeners where they can find you and find BlockFi?
Yeah, sure. So I don't know when the show is going to go live, but today is Wednesday, January 8th. And this morning we're announcing the support for 2 new assets on our platform, USDC, which is a stable coin, and also Litecoin. You can earn interest on them, get loans in them, et cetera now. So we're excited about that. And in terms of where you can find us, our website is really easy. It's blockfi.com. On Twitter, our handle is @TheRealBlockFi. My handle is @BlockFiZac. I'll give a shout out to our client service and support team. If you're looking at our website or you're already a client or thinking about becoming a client and you have any questions whatsoever, we might be the only place in crypto where there's a phone number on our website and you can call it and just talk to someone who's really smart. And we're also great over email and chat as well. So don't hesitate to reach out to us through any of those channels. And thanks very much for having me on the show. I enjoyed it.
Yeah, I enjoyed it very much as well. Keep in touch.